Okay. Not OB08. Let's go to SPRO, reference IMG, financial accounting, global settings, ledgers, and posting periods. Posting periods. Okay. Open and close posting periods. Of G. Okay. Over here, we have maintained a posting period variant, and this variant will allow any company code using this variant to post entries to post entries in any of the submodules like S is GL, M is material, K is for vendors, D is for customers, A is for assets, and plus sign actually covers all of these. So we are allowed to post from period 1 to 12, and we can also use 13 and 6 till 16 adjustment special periods for adjustments, for quarterly adjustments, for year end, month end adjustments and entries. Okay. This is basically the need for posting periods. Okay. So posting periods basically allow you to open periods from either 1 to 12 or 1 to 1 or 1 to 6 or 13 to 16 and so on. Okay. Other part is that what we did, okay, define setting for ledger and currency types. Okay, currency types. Okay, this is also important. Financial accounting. Global settings, ledgers, ledger, define settings for ledger and currency types. Now, in ledger settings, what do we do in ledger settings? For each company code, we have separate settings for currency, valuation, accounting standards, financial statement version. Okay. Now, what is valuation? Valuation, there are three types of valuation in SAP. Legal, which is you publish the financial statements. Profit center valuation. Sorry. Group valuation and profit center valuation. Okay. Now, what is valuation basically? Legal is the published financial statements. Okay. Group basically is at group level, you evaluate, and it could be in a different currency. For example, legal can be in USD. This can be in AED. Okay. And third is profit center valuation. Why do we need profit center valuation? Because profit centers are your distribution channels also. Okay. Or your product lineage or your showrooms, those are your cities where your business is set up. Okay. So you can evaluate your business based on profit centers at a group level or at a legal level. Okay. That is valuation. So in ledgers, we have numbering range like this: 1011 and 12. Okay. Now 101 is company code currency and 0 is legal valuation. 1 is company code currency and one is group valuation. One is company code currency, and two is profit center valuation. Okay, is one thing. So if it is 20, now what is 20? Let's check that. Leading ledger, there is only one leading ledger across the whole SAP landscape. Okay, and leading ledger. Okay, that is 0L made by SAP. Other ledgers can be standard ledger, and why do we need differentiation of this? Because sometimes currency can be different. Your reporting currency and your transaction currencies can be different. And for accounting standards, okay, accounting standards are GAAP, IAS, and IFRS, right? So for accounting standards, you can differentiate your ledgers as well. You can get segmented ledgers. There are two types of ledgers, standard and extension. Standard can be different from the leading ledger based on currency or valuation or accounting standard. Extension is basically just an extended part of standard ledger that it actually copies every transaction, but in a different currency or a different accounting standard. That's it. It's just a mirror copy. Okay. So I select this company code settings, and in company code settings, our is POPG, POPG 10. Now, what is 10? I told you over here. 10 is company code currency and legal valuation. Okay. So what other currencies do we have? We only have right now company code currency. So we'll go to, we'll double click this, and we have posting period variant already assigned. It is on the leading ledger. The accounting principle is GAAP, functional currency is company code. Global currency for group valuation is again yet missing. And posting period variant is POP-G, which is good. Okay. So we go to currency types now. Currency type. Now, currency type over here. Company code currency and legal valuation. Okay. Same. 20 is controlling area currency with legal valuation. 21 should be group valuation and controlling area currency. 3 is group currency. Okay. And legal valuation. And 3.1 is group currency, group valuation. 3.2 is group currency, profit center valuation. That's how it actually grows. Okay, that's how it actually represents your ledgers, your books in various currencies and various interpretations. So that is a thing. Okay, so 20 is controlling area currency. Okay, and 30 is group currency. Okay. Now, next step, ledger chart of accounts. Now, what is chart of accounts? Very easy. Nothing to worry about. As a supply chain logistics consultant, you should know what is a chart of accounts. Chart of accounts is nothing but group of or collection of accounts. Okay. For material management, guys, what do we need? Raw material accounts. We need semi-finished good accounts, finished good accounts, and in raw material account, what do we have more? GR, IR, raw material, returns, scrap, issuance, consumption, wastage. Well, that's the same as scrap. Okay. What else? GRIR, returns, scrap, issuance, consumption, wastage. Freight charges or any other auxiliary charges, right? So these are some of the accounts that you will need for every material type. Okay, material group. This is a material group, raw material. Okay. I hope this is clear to you. And same goes with this as well. Okay. And that will be semi-finished good. Okay. And same goes for this as well. Okay. But in finished goods, we have one sales account, but that is not material account, but it's related to material. Okay. So, and this is how you actually plan out your material requirement for GL accounts, and this is integrated with finance. Okay. I hope this is clear to you. Any questions? Any questions? Okay. SC10. Okay. Chart of accounts is done fiscal year variant. Now, fiscal year variant, what is fiscal year variant? Fiscal year variant. Every company basically follows a financial year, not the calendar year. One is calendar year, one is financial year, fiscal year. So calendar year is different. Calendar year is Jan to December. But fiscal means financial year. So financial year can be July to June, which happens in India, Pakistan. Okay. And there are some like April to March. Okay. That is followed in some parts of Americas, but they actually follow calendar. This is also used in Japan, I guess. Japanese actually use March to April to March. And then we have October to September as well. Okay. So calendar year that we use is January, December. Other than that are non-calendar years, fiscal year. Now, every company can be different, working in a different jurisdiction and time zone, and it will use a different. Whenever um, books have to be closed and returns have to be filed, tax returns, based on that, we choose fiscal year. That is basically that's what fiscal year is. Okay. So opening posting periods I've done, assigned variants to company. We've already seen that we have assigned field status variants. Account group. Account group, I've already told you, these are account groups. Okay, account groups that we'll use for FI and GL. Maintain controlling area, very important. We'll have to actually go into this and see. Reference IMG, maybe we might have signed. Enterprise structure, definition, controlling, maintain controlling area. PUBG, double click. Okay, this is already made. PUBG. Okay, 30 is the group currency. Okay, and the company code currency is AED, but group currency is USD. Okay, this is done. So let's go to the next step. OKKP. OKKP is also almost the same thing, but CO area will be POP-G. POP-G, double click, and we will have M, cost center hierarchy, standard, or let's say we'll call it POP-G. And once I click this, it will give me a pop-up that this is not a standard hierarchy. Should it be created? I say yes. And new entries, 2023, component active, order management active, and project sales order cost objects will be active. And new entries Pop G, since because it has the same chart of accounts and fiscal year variant, it is so we can attach multiple company codes if the fiscal year variant and chart of accounts are same. Okay. Yeah. Pop G. Continue. Pop G is done. To check the settings now, fin SC underscore ledger, important T code. This is the T code we can see from here. Okay, KP. Okay, leading ledger 0L position, not position. We'll go to company code. Okay, PUBG. Now in PUBG, there was no global currency. Now it has a global currency 30, which is group currency USD. Okay, we click it because we assigned it to company code, and now it has a group currency. Okay, currency type, which is group currency coming from controlling area. This is how you actually integrate um, controlling and FI. Okay, got it? Chart of accounts, we've already done that. I believe so. Financial accounting, global settings, and ledgers, integration of controlling with financial accounting, and define ledger for CO version. This is important, although it is not related, but it is important. Okay. PUBG is not there. Enter PUBG version 0, ledger 0L, and we can have other versions as well. What are other versions? You can see that. Okay, we have PUBG 0 plan actual version. We just have that. Let's save that. So we have legal valuation, group valuation, profit center valuation that we have already seen. Okay. That being said, okay, general ledger accounting, master data, GL accounts, preparations, and account group for PUBG. Okay, PUBG, and PUBG we have material accounts 70 to 71,000. We have to take care of this. All of your raw materials and finished good accounts will be made in this one. Okay, that's how you make groups, and you give the numbering range for each family of expenses, family of general GLs, family of HR, material, miscellaneous, assets, clearing accounts, equity, adjustment accounts. Okay, so every account actually gets a family of numbering range. Okay, and they stick to that. So it actually gives you synchronized retained earnings account. Now, what is retained earnings account? Very important. This can be asked in your interviews. Now, what is a retained earnings account? Retained earnings account is an account which, at the end of the year and month, actually carries all the income and expenses and knocks expenses and income together, and the difference as a loss or profit is taken to the balance sheet. Okay, so this is how you just maintain it. Okay, so you have to maintain that in order to pass entries. So MM guys should actually know how to do this. Okay. Now moving forward, we have already done a bit of configuration. Now comes in a little bit of uh, logistics, general and material master. Material master basic settings, material types. Material types are raw materials, semi-finished goods, finished goods. Okay. And ORH, ROH is the standard SAP code for raw materials. Okay. And this is where some of the checks are actually assigned to this material type. Okay. For example, material is configurable, or material is for process, or there is a pipeline in the process, then of course raw material is put into that pipeline, and this is used for automotive, chemicals, and what other industries where pipeline is necessary. Yeah, chemical or beverages. Okay. Is it a manufacturer part that you are making a raw material type which could be used as a manufacturer part? For example, Caterpillar. Caterpillar will use and manufacture raw materials that will be used for their earth moving vehicles. That can be a manufacturer part. Okay. Can it be used for external purchase orders? Yes. Internal purchase orders checks are actually given over here. Okay. That's how you actually make. No, internal purchase allowed, internal purchase order allowed, internal purchase orders are allowed. So internals are not allowed. For this, externals are allowed. Okay. Internal is not allowed. Okay. Save, and we save it. Okay. So define number ranges for each material type, and we have material types here too. ROH raw, and let's see this ROH raw, and it's already assigned to 7000200 ROH raw. Okay, we can also change it, but right now we just want to see if everything is in. Material groups. Okay, material groups will be different, can be different. Material groups can be like this: plastic group, wood group, compressor. Now, if a material type, raw material, is related to brake parts, so it will use this group basically. Okay, if it is detergent, then of course it will use this material group as a raw material or semi-finished group, whatever. That's how you make material groups. Okay, and this is basically for third-party software integration. Okay, and rest, of course, we'll discuss this in the later lectures. Today I'll stop here.